Current AI processors are already incredibly powerful. The bottleneck that's starting to matter more is power consumption and heat generation. When you train a large language model, you're pulling megawatts of electricity through server farms. Data centers now account for somewhere between 1 and 2% of global electricity use, and that percentage is climbing as AI workloads explode. You can only cram so many GPUs into a single rack before the cooling requirements and energy costs become the limiting factor, not the computational capability of the chips themselves. This is the power wall problem, and it's not theoretical. It's happening right now in data centers around the world. The semiconductor industry has been addressing performance challenges for decades by shrinking transistors, moving from 7 nanometers to 5 to 3. Each generation delivers more processing power in the same physical space, but those gains are hitting diminishing returns on the efficiency side. Yes, you get faster computation, but you also generate more heat, and at some point the cost of cooling those systems starts undermining the economic case for scaling up further. The Photonics pitch cuts through this from a different angle entirely. Instead of moving data between chips using electrical signals traveling through copper traces, you use light, photons moving through optical interconnects. Light travels faster than electrical signals. It generates dramatically less heat. And in theory, optical systems can carry far more data in parallel than electrical wires can. If that approach can be made to work at commercial scale, you're not just getting a modest improvement, you're potentially unlocking an entirely different architecture that allows AI systems to be simultaneously faster and more power efficient than anything possible with electrons alone. That's the technological argument driving this ETF launch, and it's why I think this deserves more than a dismissive glance, even if you're generally skeptical of thematic funds. Photonics isn't some speculative lab concept that might work in 10 years. Parts of this technology are already embedded in the infrastructure you're using right now. Fiber optic cables have been the backbone of long-distance data transmission for decades. Optical transceivers connecting server racks inside data centers are standard equipment. What's changed is the ambition level. The new push isn't just about using light to move data between buildings or between racks. It's about bringing photonics directly inside the chip itself, right into the compute layer where AI models are actually running their calculations. That's a much harder engineering problem, but it's also where the biggest performance gains would show up. Companies like IR Labs, Light Matter, and Luminous Computing are building silicon photonics processors designed specifically for AI inference and training workloads. These aren't vaporware announcements. They've got working prototypes. They've demonstrated functional chips. Some have early customer deployments in pilot programs. The technology exists. The question is whether it can scale economically, and whether the performance advantages hold up when you move from controlled lab environments to the chaos of real-world data center operations. When I dug into the actual holdings of LUMA, I found something that surprised me. This isn't a portfolio full of pre-revenue startups hoping to strike it rich. You've got established companies like Lumentum, Coherent, which used to be called II-VI before a merger, and Cisco. These are firms with billions in annual revenue. They're already supplying optical components to the hyperscale cloud providers. They've got existing product lines, paying customers, and proven manufacturing capabilities. Almost without exception, these products get marketed and distributed right when the narrative is at peak enthusiasm, which usually means valuations are stretched and the easy money has already been made. Then they spend years underperforming while investors who bought the story watch their positions slowly bleed. LUMA launched in early 2025, right in the middle of one of the most crowded narratives in the entire market. AI infrastructure. Every investor presentation, every conference panel, every financial media segment is talking about the build out of AI systems. When a theme is that universally discussed, you have to ask whether you're early or late to the trade. And launching a targeted ETF into that environment makes me very cautious about the timing, regardless of the quality of the underlying technology. The second issue is that photonics for AI compute is still genuinely early in the adoption curve. Most of the revenue these portfolio companies are generating today comes from traditional telecom applications and standard data center interconnects, not AI-specific photonic processors. The big technological leap that would justify a premium valuation, photonics integrated directly into chips at scale, running production AI workloads for major customers, that's still mostly in the research and development phase, or in limited pilot deployments. If that transition takes 5 years to play out instead of 2, this ETF could easily spend a long stretch going sideways, or even down, while the technology matures and works through the inevitable setbacks that come with any complex engineering challenge. You might be right about the destination, but still lose money because you bought the ticket too early. Concentration risk is the third problem I see when I look at this fund structure. A significant portion of the portfolio is allocated to a relatively small number of holdings. This isn't a diversified basket of 100 companies where one or two disappointments don't move the needle. If one of the larger positions stumbles, maybe they lose a key contract to a competitor, maybe a technical milestone gets delayed, maybe management makes a strategic misstep, that's going to drag down the entire fund's performance. You're not getting broad exposure to AI infrastructure. You're making a concentrated bet on a specific technological approach within a specific subsector. And if you found this analysis useful, subscribe so you catch the follow-up when we have more data on how this space is actually developing.